Hello, thank you for joining us. My name is David Musisi. I'm a retirement information officer with Saskatchewan Pension Plan. The purpose of our meeting today is to discuss how the 2022 market impact has affected your SPP investment and what that means for your investment going forward. In order to get a true deep understanding of the matter, we have to speak with people with a great wealth of knowledge, experience, and insight in the strategic direction of SPP. Today on our panel, we have the perfect people to speak about this subject. Executive Director Shannon Corey and our Director of Finance, Cheryl Andrews. Welcome, Shannon and Cheryl.
Thank you, David. Happy to be here.
Yes, thanks for having us.
Shannon and Cheryl, we are proud of what we have achieved as a pension plan. However, since inception, we have not had many periods like the one we're going through right now. To be perfectly honest, the world has not experienced many periods like today. Needless to say, this has raised a lot of questions from our members. I would like to go over some of them and hear your answers because I believe many of our members share the same questions. I am concerned. I look at my statement, call the plan, and look at my SPP account. I see my account is worth less now than it was 6 months ago. What are you doing to change this?
As a pension plan, our focus is long-term returns to members. Our diversified income fund and our balance fund are all operating as they should, with long-term returns exceeding the benchmark and inflation. In considering your overall pension and your account balance with SPP, remember the big picture. So think of the earnings as a whole to date in comparison to your actual contributions. So from inception to now and beyond 2022. Cheryl, do you want to add anything?
Yes, sure. It is really important to look at the full life cycle of your investment. There is always going to be ups and downs. SPP has a lifetime average of 8% return to members. We continue to be low to medium risk.
So, Shannon, what is our board doing to oversee the investments?
Our board is extremely diligent in its oversight of the SPP investment funds and is very aware of the current market challenges facing investments. The Balance Fund Asset Mix Review was completed in 2021 with changes effective in January of 2022. The changes were made to further diversify our portfolio by adding a private debt asset class and by changing target weightings for our current investment classes. One of the notable changes to the weighting was increasing infrastructure from 10% to 20%. The increased allocation to infrastructure also resulted in hiring Fengate Capital Management to manage 10% of the infrastructure portfolio. Cheryl, do you want to elaborate on how these changes help mitigate risk for members?
I'd be happy to, Shannon. These balance fund asset mix changes provide protection against increasing inflation and interest rates, provide added value to our overall fund return, resulting in returns exceeding benchmarks or comparable investment options. They provide active managers, tactically making investment decisions that protect members in the current down market. The advantages of our balance fund investments include manager diversification. SPP is diversified not only by asset class, but also by investment managers and management styles. Up until 2021, we have had a growth and a value manager. With our new asset mix, we have increased from 2 to 4 investment managers by adding 9Point and Fengate. The different asset classes in the balance fund add value. Mortgages offer the potential to take advantage of the high interest rates. The higher interest rates correlate to higher investment income for the balance fund. Increasing infrastructure offers protection against the high inflation as it is a natural hedge or an offset to inflation. The addition of the private debt added protection by further diversifying our balance fund assets that is very unlike all the rest of our assets already that we were invested in. Canadian equities have been a strong asset class for us, returning 5.9% in the first quarter. As well, there is limited exposure to investments that are directly impacted by the Ukraine conflict.
I was wondering where you think the market may go in the near, not so distant future, and if now is a good time to invest or to sit it out.
There will be ups and downs with investment market performance. The current situation provides opportunities for savers and the opportunity for investment managers to purchase undervalued, healthy investments at reduced prices. This will allow larger benefits and future gains when markets and the economy rebound. Cheryl?
The sentiment of the broader economy is that there have been worse times, but not recently. Markets are and always will be cyclical. Markets will eventually bounce back, but the timing and the rebound is unknown. We aren't expecting to see a huge change by year end, but I agree with you, Shannon. The current market provides a huge opportunity for savers.
I don't know what to do because I'm approaching retirement soon, and with the impacted returns SPP has had lately, I am worried that I will not have enough money for retirement.
Well, that is a very fair concern. When people make changes to their investment options, they are essentially realizing their earnings seen in their account to date. With SPP, we have a few options. For SASC members, the variable benefit would delay this realization, allowing more time for the market and the economy to recover while you begin drawing income. Additionally, we are now experiencing higher annuity rates. So for those who want a fixed monthly income, they are able to purchase an annuity with SPP at a higher amount now than they would have this time last year.
With all I see on the news saying that interest rates are going up to fight rising inflation and that is hurting the whole economy, how can you actually make us money?
The current situation is a reality, and as a pension plan, we're not immune to it. When the markets are volatile or uncertain, as they are now, it all comes back to being invested in a well-managed plan with good philosophy, strong oversight, and diligent professional fund managers. At SPP, our oversight includes annual reviews of our statement of investment policies and goals. This sets our benchmarks to protect against risk, provides assurance of quality investments in order to decrease risk, and ensures long-term returns to members. We have professional money managers, investment consultants, and board and management oversight to ensure a sound investment to members. Investments are monitored daily, monthly, and quarterly. We perform annual audits and actuarial valuations. And finally, we adhere to our Plans Act and regulations.
With higher interest rates and the market turmoil, will the fund become more expensive to manage? Are you going to increase fees?
No, the Board of Trustees and management are committed to an MER of 1% or less. That commitment has not changed.
Why should I invest my money with SPP anymore? If you and everybody else is losing money, why should I invest at all?
That's a good question. We know that this is a tough time for market returns. And while it's not unusual or unexpected for market returns to fluctuate over the course of time, we know market downturns are hard to weather. The key is not to panic and make a knee-jerk reaction decision. Hold on and we will weather the storm together. Our board and investment managers continue to work hard on our members' behalf and will continue to look for attractive buying opportunities as sell-offs to clear market excess present themselves.
Why doesn't SPP have a risk-free pure money market option for members to park their funds to reduce exposure to potential market risk during times like these?
Well, that's a good question. SPP did have a full money market. That was the short-term fund. The short-term fund was introduced in 2010. Through our last asset mix review in 2019, the board and investment consultants determined that the fund, operating as is, was not keeping up with inflation and was resulting in a negative real return to members. It was recommended to add diversified sources of income, which are expected to provide a measure of protection from interest rate and credit risks. This resulted in the Diversified Income Fund forming, replacing the short-term fund in 2020. The DIF is meeting the performance objectives set in the Statement of Investment Policies. It is important to note that even money market funds are performing in the negative this year and therefore would not have offered full protection from the current economic cycle we are experiencing. The Diversified Income Fund provides a more robust and viable investment option for both contributing members and those choosing the variable benefit pension option at retirement.
How many of the SPP board members have a financial background? Are they really the best people suited to make investment decisions?
SPP is fortunate to have an expert board full of professional designations, including accountants, a lawyer, certified financial analyst, and investment professionals. They are very well qualified to oversee the SPP, and they continue to receive ongoing education and training. Their expertise and fiduciary diligence assures members of solid oversight for their investments. It is also a requirement of our legislation that we have board members that are also members of SPP, so they have a vested interest in the plan's performance.
Thank you for both taking the time to answer those questions. In closing, are there any final words either of you would like to say to our members?
To weather this current market cycle, it comes back to having professional investment managers, a solid asset mix, and oversight. We are pleased with how our investments are performing this year. Even though they are negative, they are exceeding the benchmark and performing as they should. We are confident with the direction and investment strategy implemented. I look forward to what the future holds for this plan.
We know this is a challenging time, and we are here to respond to our members' questions and concerns. We truly appreciate hearing from our members. Thank you.
Thank you for your time today.